Payroll and Tax Filings, Module 1, Payroll Taxes. Module Introduction. You know how to calculate payroll. In Course 2, you calculated gross pay, applied deductions, and landed on net pay. This course is about what happens next. Every dollar you withheld has to go somewhere. Every tax the employer owes has to be calculated, recorded, and remitted on time. Every pay period has to get on the books. We start where every payroll period starts, the payroll register. That document drives everything, your liabilities, your journal entries, and your tax filings. Lesson 1, the payroll register. The payroll register is the most important document in payroll. It is the record of every employee's earnings, every deduction, and every tax withheld for a given pay period. It has two sides, the employee side, which shows gross pay, all deductions, and then net pay, and then the employer side. This shows the employer's FICA match, FUTA, and state unemployment insurance. When you outsource payroll, this is the report that you print so that you can get everything on your books. Every number in your journal entry comes from this register. Here is the monthly payroll register from the module reading. You can see the total gross pay is the top section. We have regular pay and then salary, so we have a total gross pay of $9,859. And then the next section is employee taxes and deductions. For this example problem in this module, we only use taxes, but if you had garnishment, if you had health insurance, if you had retirement plans, union dues, any deductions that you would have would be in this section. So this one lists only taxes that came out. Then we have our net pay, so that's going to be the amount of cash that actually goes out the door. And then we have the employer taxes and contributions. We have the FUTA tax that is employer only. We have the employer's portion of Social Security, the employer's portion of Medicare, and then the employer's SUI tax. So then you see the total employer tax expense, $873.48. So the total payroll cost is $10,732.48. Lesson 2, payroll withholdings. When you withhold money from an employee's paycheck, that money does not belong to you. The moment you withhold it, you have a legal obligation to remit it to the right place. That makes it a liability. It's not any kind of income, it's not an expense, it is a liability. Every deduction on the register is a credit to a payable account. Health insurance, you credit employee health insurance payable. If you have 401k contributions you withheld, then you credit 401k contributions payable. Wage garnishments, you would credit wage garnishment payable. Union dues, payroll deduction for an IRA, same rules apply. In Module 2, every one of these becomes a credit in your journal entry. Lesson 3, employee payroll taxes. Again, employee payroll taxes are withheld from the employee's paycheck. They are not paid by the employer. Every tax line in the register follows the same pattern. Withheld from employee, recorded as a liability, and then remitted to the appropriate agency. Federal income tax is based on the employee's W-4, and employers must implement any changes to the W-4 within 30 days. And remember, the federal income tax is paid by employees only. Employers do not pay a federal income tax. FICA, this is your Social Security and your Medicare. It is a fixed rate and it is calculated every period. PA state income tax. For Pennsylvania, it is a flat rate, which is 3.07%, but the rules vary by state, and not every state has an income tax, so make sure you're aware of the rules in the state that you operate in. And then local tax, where I live, it is Doylestown Township, and it is 1%, but again, always verify with your locality. And then PA SUI, this is your state unemployment insurance. The employee portion here is 0.07%. But not all states charge a SUI tax, so be sure you know the rules in your state. These liability accounts for payroll taxes are also referred to as even wash accounts, and this means they should always wash to zero. What you collect is what you remit. If there is a difference between what you withheld and what your tax liability is, then there is a mistake somewhere. Here is a summary of the FICA rates and limits, and we did go over this already. I just wanted to make sure we had a little summary here for you since we're now dealing with the journal entries. For the FICA tax, Social Security is 6.2%, and remember there is a wage limit on that. And for 2026, that wage limit is $184,500. So when your employee hits that amount for their income, for their annual income, you stop taking out Social Security tax. And then Medicare is 1.45%. There is no limit on the Medicare tax. However, there is an additional tax for high earners. So employees who go over $200,000 in gross earnings will have an additional 0.9% added to that 1.45. Keep in mind that is for the employee only. The employer has to match Social Security and Medicare, but the employer does not have to pay that premium tax rate for high earners. That is for employees only. And then the FICA total is 7.65%. Lesson 4, employer payroll tax expenses. These taxes are entirely the employer's responsibility. Nothing is withheld from employees. These are expenses for the business. From our September register, we had a total of $873.48 in employer tax expense. We had the FICA match, which was $754.23. Employers match both Social Security and Medicare dollar for dollar. The federal deposit covers employee FICA and employer FICA in one payment. FUTA, which was $26.77. This is your federal unemployment tax. This rate is 6% on the first $7,000 per employee. And again, you can get a credit of up to 5.4% for timely state unemployment insurance payments, which would bring your rate down to 0.6%. SUI for the employer is $92.48. This is your state unemployment insurance. This rate also varies by state, and it can be experience rated, which means if you are an employer that has laid off a lot of people and you have a lot of people that are collecting unemployment as a result of you laying them off, you will have a higher tax rate. That's what it means when we say experience rated. So again, this is a rate that varies by state. The state will generally let you know what your rate is. And again, this is an employer only in most states. There's only a small number of states that will actually charge employees a SUI tax as well. This is a summary of the federal unemployment tax rules. So again, the standard FUTA rate is 6% on the first $7,000 of each employee's wages. So if it's 6% on that $7,000 for everyone, then that means every employee is going to pay a maximum of $420. And then once they hit that $7,000, you stop calculating the FUTA for them. Credit for timely SUI payments up to 5.4%, which would reduce your rate to 0.6%. And then qualifications, if either of these conditions are met, then as an employer, you have to pay FUTA on your employees' earnings. If you paid $1,500 or more in wages in any quarter, or had one or more employees for 20 plus weeks, you then are responsible to pay a FUTA tax for the first $7,000 in earnings for every one of your employees. The full picture. Every line in the September payroll register is now accounted for. Lesson 2, payroll withholdings. We did insurance, 401k, garnishments, liabilities until they are remitted. Lesson 3, employee taxes. Your federal, FICA, state, local, withheld, recorded as payables, and then remitted based on schedules. Lesson 4, employer taxes. This is your FICA match, your FUTA, and your SUI. Not withheld from anyone, and they are recorded as an expense for the business. Total gross pay is $9,859. Total payroll cost is $10,732.48. That $873.48 gap is the employer's tax obligation. Every business owner needs to understand this number. Module 2, payroll journal entries. We will use the same register, same numbers, but now we will record them and get them on the books.